When I was a kid, there was nothing better than the thought of treasure. Did you think, like I did, that there was treasure, like either, I don't know, around the block or in your backyard? I remember we went to Howard Johnson's for dinner. Oh, yeah. We went to all the big name places when we went out to dinner. And at our Howard Johnson's, they had this treasure chest with a box next to it that was full of keys. And assuming that your parents actually paid for the meal, you got a chance to take one of those keys out of the little box, my brother and I, and see if you could open up the treasure chest. And if it did open it up, obviously you got everything that was inside. And what was inside? I have no clue. I had no clue then. I still don't. But I'm sure it was amazing because you know why? Because it was Howard Johnson's. Hello. So I remember taking my key, being super excited, putting it in the lock, twisting the lock, and it wouldn't twist. Nothing. And I remember I was so disappointed. I wanted to go back and try it again. I wanted nothing to do with the box on one hand, but on the other hand, I'm 50 years old. And I'm still talking about this box today. Treasure. What if, just maybe, someday, sounds like all the dreams of active stock traders, doesn't it? Live from the 3-room apartment over Uncle Jack's garage. Hey there, everybody. I'm Joe Saul-Sehy, Average Joe Money on Twitter. Welcome to Money in the Morning. This is a podcast where we take not one, but two recent headlines from the financial press. And we not only read them like some podcasts do, we actually talk about what they might mean for your wallet. And today, we're going to talk a little bit about trading. We're going to talk about active investing a little bit. More specifically, let's talk about oil. It's an oil-themed podcast at Money in the Morning. Not only are we going to go over the two of those, but we're going to link these two pieces together to give you a big idea to take home. Thanks to Lemonade for supporting Money in the Morning. Get Lemonade renter's insurance in seconds by heading to stackingbenjamins.com/lemonade. Zero paperwork and zero brokers. It couldn't be easier or faster. That's stackingbenjamins.com/lemonade. Thanks to everybody who's done that using our link, by the way. That keeps us podcasting. So thanks a lot to Lemonade for supporting the show. And when you check out Lemonade for using stackingbenjamins.com/lemonade. All right, Laura, we got everything set up. Let's get this thing started.
Here come two headlines ripped from the financial press, only at Money in the Morning.
Thank you very much. Our first piece comes to us from Business Insider. This is written by Will Martin. Oil. You know that stuff, oil, looks, and I'm not talking about olive oil, although yum. Oil looks set to break its record losing streak, but analysts warn it may still drop below $50. Now, when we talk about oil and $50, if you're like me, okay, oil 50, I got no idea. Do you follow oil closely? Because I don't. I'll tell you what I follow. I follow the gas station price down the road. That's what I follow. But oil at $50, incredibly low for those of you that don't follow it. So just to give you the catch up, right? You know, at the beginning of the show where they show you what's happened so far in the series, like if you're starting off here in episode 7, the first 6 episodes all matter. We're going to give you the Cliff's Notes. Oil been going down, and there's a glut of it. Think that there's a lot more oil than there are people using oil, and so oil prices going through the floor lately. That's your catch up. You're welcome. But oil. Let's talk about what's going on. Oil prices look set to finally break the record losing streak on Wednesday morning, but analysts remain concerned that prices could drop below $50 a barrel. By about 8:20 a.m. Eastern Time, the price of West Texas Intermediate, the U.S. benchmark, was trading at $56.27 a barrel, a gain of 1.04%, while Brent crude, the international benchmark, was up 1.3% at $66.31. The price increases came after a trading session on Tuesday when oil lost as much as, get this, 7% of its value, and seem related to a report from Reuters that the OPEC cartel of oil producers and its partners were discussing cutting oil output by up to 1.4 million barrels a day. Quote, "It's been a perfect storm for oil as of late, with lower global growth expectations, higher output from the U.S., Russia, and Saudi Arabia, waivers on Iranian sanctions, and general risk aversion in the market, sending Brent and WTI rapidly into bear market territory," Craig Earlham, a senior market analyst at Oanda, said on Wednesday. Tuesday's drop, which saw both Brent and WTI fall by about 7%, was driven largely by a tweet from U.S. President Donald Trump urging Saudi Arabia not to cut production. The tweet came in response to Khalid al-Falih, Saudi Arabia's oil minister, saying the kingdom was likely to cut production by about 500,000 barrels. Oil prices have tumbled into a bear market, down at least 20% from their October peaks, amid concerns of growing stockpiles. Earlier in November, the Trump administration granted 8 countries temporary waivers from the sanctions it placed on Iran that were designated to cut off Iran's oil from the rest of the world. Data released last week by the Energy Information Agency showed U.S. oil inventories climbed by 5.8 million barrels in the week to November 2nd, while production hit a weekly record of 11.6 million barrels a day. The oil market had already been under pressure since the beginning of October amid trade tensions and concerns over rising interest rates. Prices may well have farther to fall, Earlham said. He, quote, "wouldn't be surprised to see prices for WTI to slip to $50 a barrel and Brent to $60. It's not too long ago that people were talking about the prospect of $100 a barrel oil, but that now feels like a distant memory," he said. And it goes to a chart which shows as late as the end of September, prices over $75 a barrel for West Texas oil. Big drop there. Imagine you own something that's $75 a barrel, and bam, all of a sudden you're trading at a much lower number, closer to 50. So here's the question. So what does this have to do with you? A lot of people in oil, prices sink for a reason. Prices sink, number one, because of the fact that people aren't buying. And so sellers have to offer it at a lower and lower and lower price to get people to buy. I mean, essentially, the market is an auction, right? We start off with a price, and then nobody buys. So what do? You lower the price, and you lower the price, and you lower the price, until finally somebody does buy. But on the other side, prices also go down because people are excited to dump at that lower price. I mean, essentially, in the housing market, we have a situation where there's no supply right now. Nobody wants to sell their house. If you've got a decent house, people are sticking to their house. And that's holding prices pretty high. And it's also making it difficult for buyers. It's also making it difficult as interest rates come up in the housing market. So you've got this struggle in the housing market that's kind of, in a few ways, maybe a little bit the opposite of what's going on in the oil market. Nobody wants to sell. So prices hold on as buyers make higher and higher bids, but they're having trouble making higher and higher bids because interest rates up and up and up and up. In fact, we got stories coming up on that, either here or over on our Stacking Benjamins podcast that I found interesting in the last 24 hours. But this oil idea I thought was even more interesting because there are clearly sellers in this market, people who have bought oil maybe at 75. They thought it was going to go to 100. Now it's hanging out at 56. They go, you know what? I'm selling. Whenever you're getting ready to sell something, there's this idea on Wall Street that hopefully changes your emotion when it comes to selling. And it's this: sell on the rumor, not on the fact. Sell on the rumor, buy on the fact is the way that the saying goes. So I hear people say, hey, I'm going to wait till it does something or until some announcement's made or some big thing happens, and then I'm going to buy. Not when you buy. Not when you sell. I almost said not when you buy. Not when you sell. You don't sell on the fact. And you know what's funny? This is the fun of live TV. I do have that backwards. Sell on the rumor. Buy on the fact. Sell on the rumor. So we want to sell. We want to sell when we think prices might go up. We don't want to sell on the fact that prices are low today. We don't want to sell now. I mean, we've got this fact in front of us that things are going really badly. We do not want to sell today. Sell on the rumor. Sell on the rumor. And so if we think there's a rumor of hot stuff happening, let's say we hear that there's great stuff that's going to happen to oil and prices are pretty high, well, then we sell there. Because the second that great things happen, the second that the fact actually happens that a great thing is done, whole different ballgame at that point. Completely different ballgame. It's funny how when I record these early in the morning, I can mix myself up. Isn't that great? That's the miracle called live recording sessions. We do this live in front of a Facebook audience, and that always makes it fun for me to record these sessions. Somebody gave us a review the other day saying they just wait for to see me make a verbal mistake. There's another one. We should have like a bell, shouldn't we? When I mix myself up because we're live. That would be fun to add that to the show. Not a great time to sell oil. And yet, because we are emotional people, that's exactly what we do. Me with the treasure chest. Angry, emotional, wanted to get another one right away. Crazy. All right. Let's say hi to everybody hanging out with us today on Facebook. We did this very, very quickly and earlier in the morning than we usually do. We got Claudia here. Kevin's here. Ryan. Hey, Ryan. Cameron's here. We've got Ben here. Ben asked if Doug is our special guest today. Doug will do the closing credits as he usually does here. Alexander's here from Germany. Hey, Alexander, glad that you're with us. Kevin says, but if expectations of falling oil prices are causing otherwise healthy oil companies to tank, couldn't a patient investor go bargain hunting for individual stocks like XOM? Interesting. Erica's here. Hey, Erica. We're going to actually, Kevin, we're going to talk about your question about should we go bargain hunting in our next headline. So why don't we transition to that? Kevin is our transition expert. I'm bad at it. Kevin's great at it. We're tag teaming this one. Our second piece today comes to us from Bloomberg. And Bloomberg has an interesting segment. What's cool is this is not a Bloomberg video piece. Well, audio. This is a video piece. Holy cow. This is a video piece from Bloomberg. Let's get out of my own way, Joe, and play the video.
At the price of oil. I mean, is it impossible to predict right now? We have waivers, we have no waivers, we have the shale oil, we have basically what Saudi wants to do and how much barrels will be taken off the market.
I think there's a lot of moving parts, but the key thing to focus on at the moment is that this is very much of a politically driven market. Yeah. As you were saying, OPEC, Iran, politics, China trade. The interesting thing is, I believe the industry is very much building a structurally bullish market for the next decade through a complete lack of investment across particularly the oil mega projects, partially led by the low carbon shift, but also by a complete lack of financing for any independent player trying to do mega projects.
But Michele, if going back to the price of oil, that's kind of like more short-term, imminently. If they take 1 million barrels of oil outside the supply, or 1.5, what does that mean for demand? What does that mean for the price?
I think there is no doubt that a delta of 1 million barrels per day can clearly get us back up above $70. Demand remains robust, not strong, because the global economy is no longer as strong as it was at the end of last year, but demand remains robust. We see no structural shift in the way the world consumes oil. US is delivering better in terms of volumes, but we still need to see the worst of the bottlenecks in the Permian in the first half of 2019. And we're going to start to see a slowdown in the rest of non-OPEC as well. So I think if OPEC acts together and takes away barrels from the market, we will go back to above $70, which will be an extraordinarily positive environment for the industry as a whole, where the cost structure has come down to around $50 per barrel.
That guy that you're just listening to, guess what his position is at Goldman Sachs? I know you're going to be shocked to hear this, but he is an energy analyst at Goldman Sachs, and he thinks that the energy sector may end up being strong. Shock. It always amazes me that we get these segments on TV or online on videos where you have these people, these talking heads who are going to do very well if you buy the stuff, telling you that you should buy the stuff. But he said a few interesting things that we want to go over. There is no structural change in the way the world consumes oil. Everybody's consuming the oil the way they used to be. We're seeing robust demand, but not what huge demand, because of the fact that the economy isn't as good as it had been worldwide. We're seeing not just the United States, but other countries tightening interest rates. And as you see interest rates rising, as other versions of the Federal Reserve around the world act, you see economies slow a little bit. You also see some economies just slowing without regard to what's going on. You've got other countries where their version of the Federal Reserve, if they have one, is actually lowering interest rates. So you've got all these different actions around the world, but generally what you have is a little bit slowing economy. But oil, not essentially big time change the way people produce oil or the way people consume oil. I buy that. Also, not a lot of infrastructure changes, meaning that these companies that refine oil, not building a lot of new refineries. We also know that is true. But then he said a bunch of things about oil that you might not understand. He talked about Permian Basin output. He used a few terms that we won't get into today. But I think the point here is this. There's a lot of what Kevin said earlier in our comments here as we do this live about picking up oil today. Maybe buy on the rumor. So we said you don't want to do the wrong thing here. But do you buy on the fact that now maybe interest rates, oil prices are going to start climbing at some point soon? You want to watch out for this. This is something that you'll see investors do very often. Investors will see two pieces like we had today. One that said oil's falling. A piece that says we think it's going back to 70. You think you know everything you need to know, and then you buy. My answer to that, maybe you buy. But at this point, this is the beginning. If you read, there's a fantastic book out there called Beat the Street by a guy named Peter Lynch. Peter Lynch was a fantastic mutual fund manager for a number of years. And in Beat the Street, what Peter Lynch said was that most people at this point, given all the stuff I gave you today, just that 1-2 punch, they'll go buy it. This is just the beginning, not the end. At this point, we really still know nothing. I mean, unless you've been following oil and you understand exactly what not just this dude's talking about, but you also get away from talking heads and start looking into the numbers. Once you start looking into the numbers, the data, what all the bad things are that could happen to oil, only once you do that, then can you make your play. And by the way, is it a bet to put money in oil? Yes. But the cool thing is much like with anything, no matter what you do, it's going to be a bet at the end, but you want that bet to be based on as much fact as possible. Like as an example, at a horse track, You ever been to a horse track? I've been twice, 3 times. I've been 3 times. And in all 3 times, I don't know anything about anything, but I know there's somebody there who knows a lot more about it than I do. We're both placing bets. One bet much more informed than another bet. I also know that playing craps, like when you talk about betting, there's somebody betting that knows a little bit about what they're doing, and there's people that don't. If you know what you're doing, you know that this isn't the end. This is just the beginning. Interesting stuff. Alexander says that he bought a ton of Shell when they were around 19 to 23 EU a share. Kind of like it ever since then. Hopefully Joe doesn't prove me wrong. I don't know where Shell's going to go, Alexander. Alexander says, just buy and hold. I think BG gas was a great deal for them, considering renewable needs some kind of clean backup when there is no sun, etc. China's long hunger is still huge. Not sure what that last piece means, but I will agree with you. I will agree with you here. Buying and holding and deciding at what point you're off the train and making sure that you're not buying and selling at the wrong time. I think now is a horrible time to sell oil. Buy oil? I don't know. But I know that what we gave you today is just the beginning, not the end. And at this point, you want to become a detective. Don't be a buyer yet. Be a detective. Good stuff there. All right. Just a second. We're going to give you your big idea for the day. We're going to take both of these. And usually we don't have one theme during a show, but I thought it'd be fun to play both sides of this oil idea today. Makes it interesting. Mixes it up a little bit. Speaking of mix it up, Lemonade is mixing up homeowners insurance and also renters insurance. You won't find many people walking around with a t-shirt talking about their homeowners insurance company or their renters insurance company because nobody loves them. You fill out a ton of forms, maybe send a fax, whatever that is. Welcome to 1996. And when you need them most, they hike up your rates. Well, Lemonade's different, powered by artificial intelligence and behavioral economics. Lemonade replaces brokers with bots and paperwork with algorithms. And what does that mean? It means you get a policy in seconds starting at $5 a month. And if you have a claim, it's so much easier to file your claim. And it's so much easier to have your claim satisfied than it is a lot of the time when it comes to insurance. The best part, you can choose a charity to support, and Lemonade's going to donate your leftover premium money to the cause once a year. So from a necessary evil into a social good, who knew insurance could be so fun? Just head to stackybenjamins.com/lemonade to get a quote in 90 seconds. stackybenjamins.com/lemonade. Good stuff there. You know, and what's interesting about Lemonade is that because you can get a quote in 90 seconds, why not do it? We tell people to always get a quote very, very quickly. Go get a quote from a place like Progressive where you can get 7 at a time. Put Lemonade in there because you can check it quickly. I find I don't check Southwest Airlines as often as I should because of the fact that they use a separate reservation system. And sometimes I just forget, frankly, when I'm checking flights to check Southwest Airlines. Same thing here. Very, very quick. And if you want to take a look once every other year, Lemonade takes you 90 seconds. You could do it once a week if you want to. stackybenjamins.com/lemonade. I wouldn't do that, by the way. All right, let's get to our big idea today. And our big idea, I think, today is this. You're going to find right now with the low price in oil that people are emotional. And whether it's oil or the stock market, like we've had lots of stock market gyrations in the last few weeks, haven't we? You have to be not emotional when other people are full of emotion. You want to study numbers when everybody else is following the talking head. We listened to a talking head today. He brought up some points. We don't want to end there. We want to start there. The talk is a nice place to start, but there's another issue. There's a bigger issue here that I want to get to, and I think this is our big idea. Real issues are these. Number one, is oil going to come back faster than the market in general? Because it's easier and less risky and allows you to focus elsewhere if you just stick with the broad market. I see people spend a lot of time on research, and then you take a look at the results of that research, and nothing. They have nothing to show for it. And so we want our time to be worth something. So that's question number one. Is it going to come up faster than the market in general? The answer is, I don't know. But as you're doing your research, you have to believe in your heart that that's going to come up much quicker than the market in general is going to rise over the same amount of time. Otherwise, it doesn't meet what's called the risk premium thing. The risk premium is the amount of energy you spend, the amount of return that you get for the extra risk that you take being in one sector versus a broad, less risky market. But there's a second idea, which is this. How does the idea of owning a single commodity actually fit into your goal? Because the one thing we didn't talk about today at all, guys, was the goal. What's your goal? And I think that maybe if you have a small sandbox account to play with oil, or maybe the energy sector is a piece of your asset allocation, those are a couple ways to start. But by starting with what do I need and where does it fit, and then applying the oil lens, you're not just going to make a better overall trade, but you're going to make a trade that fits your overall goal. You're going to have better sell discipline, which is super important when you're ready to end. And I think you're going to be happier overall instead of chasing another asset class that might or might not be low today. Wasn't that fun? I love talking about that stuff. Thanks for hanging out, everybody, on Facebook, including my little train wreck moment there in the middle. Thanks to everybody listening out there in audio land. We'll see you next time. Go stack some Benjamins. Bye-bye.
Money in the Morning is created by Saul-Sehy and comes to your ears because of the collective genius of our producer, Richie Rutter-Reese, engineer, Caden Thompson, and a pack of very well-trained ferrets here in the basement. You'll find links to all of our headlines featured on today's show in Joe's Twitter feed at @AverageJoeMoney. I know you already know this too, but Money in the Morning is for entertainment purposes only, and you shouldn't act on anything recommended by a bunch of entertainers in a basement without first consulting with your financial advisor, and second, having your head examined. Have a headline you'd like us to discuss? Send them to Joe at stackingbenjamins.com or put them on our Stacking Benjamins Basement closed Facebook group. This show is copyright 2018 Stacking Benjamins LLC, all rights reserved. I'm Joe's mom's neighbor Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.